Okay, what's going on, everybody? We are live here. We're going to continue on this accounting model, accounting system. It's pretty awesome. We got a ton done yesterday, a ton done on this yesterday. All the way through basically all the types of revenue you can have, how we're going to set that up, cost of goods sold, inventory, and inventory purchases. So we went through all those. We did all the logic, tested it all, so that's looking good. I'm going to go through it real quick at the beginning here, but before that, uh, check out smarthelping.com for more financial models, templates, and tools. I've been working on this stuff for, a good 6 years now. Um, the accounting bundle here is where I'm going to add this spreadsheet once I'm finished. It'll be in here somewhere. Uh, I'll probably just charge $45 for the template. And you can check out all the templates I've ever built on the financial models tab at the top for $9.99. And that is lifetime access, meaning everything I ever build in the future is also included. So check it out. Okay, uh, sound check. Okay, sound is good. Let's tweet. Part 3. Okay, perfect. So where we left off yesterday, let's just do let's clear this out and just do examples of what we can currently, how this currently functions. So let's say we have a date in January, sales from customers, and we're just going to make sure all this logic still works. So sales, so we had $500 of sales. Then let's also say in the same month, sales on account. Let's say we had maybe 750 on account. And then let's say in February, collection of sales on account. So we're receiving the money now in the next month. So we'd go receipt from sales on account. And let's say we got not all of it, but some of it. So that logic here, total revenue goes up by the total amount of sales. Balance sheet, we've got cash, but we've also got accounts receivable since some of it was on account. You can see in February we collected some of that, so cash goes up a little bit more. Accounts receivable goes down. Retained earnings goes up by the net income, which is the total sales, so that balances out against the assets. Cash flow statement here, you can see the net income, reduced sales on account, and then increased cash from receipts on sales on account. So that's all working great. What else do we got here? Let's say also in January, let's say we had some cost of goods sold. And we're going to do first cost of goods sold non-inventory. So let's say $50, maybe some hosting or something. If it was a SaaS company or whatever, any non-inventory item that you can consider cost of goods sold, you would enter here. You can also enter same month, let's say cost of goods sold on account. So this is if your non-inventory cost of goods sold items that you're paying on account. Let's say 75 there. So in theory, that should increase accounts payable. This will increase the expense, reduce cash. Then let's say, and the reason why I'm checking this is I want to make sure all the logic works before we go forward. Now let's say paid cost of goods sold. So we paid this 75 the next month. So then we go payment for cost of goods sold inventory on account. Let's say we did the whole amount. Then what else? Let's see on January. Let's say there was also cost of goods sold purchase or What's the next thing we can do here? Let me look at the account list. We did that, we did that, that. Okay, so inventory purchases. So this is directly buying inventory, not on account. So you bought, in January, we bought $5,000 of inventory. And let's say in the same month, we bought some inventory on account as well. Let's lower this down to 2,000. Inventory purchase on account, let's say 1,500. And then in February, paid for inventory on account. Let's say we paid it all back. And the full 1,500. And then what's our last item we have that works? Cost of goods sold. Oh, right. Okay, so this would be in January. So this would be cost of goods sold expense, inventory. So any inventory items you sold, you can put, well, let's say you sold a couple cars, you're a car dealership. Here's my entry for that, cost of goods sold. Expense, let's say let's say 800. Okay, so that represents everything we've done so far, all the logic, and all the different accounts we have. Let's look at the income statement. So here we've just got sales, we've got cost of goods sold non-inventory, cost of goods sold inventory. Now this 125 is note showing cost of goods sold non-inventory and cost of goods sold on inventory on account both. Even though this expense isn't paid yet, it's hitting the income statement in this month. Now when it's paid back, it'll hit the cash flow statement. And right here in the cash flow statement, it's going to get added back. So we'll make sure that all works. Overall net income 325 based on all of these transactions. So cash is down 1550. Accounts receivable is up here, and then it gets paid back. We already know that works. Inventory is at 27. Now this is not going down here because we only had one cost of goods sold inventory item. Let's say in Feb, so you can see it. So cost of goods sold inventory, let's say another 750 went down. So then that 750, you can see here, will decrease. There's the decrease in inventory. So that's what that is. Total current assets, and this is fine. This is negative. In theory, you'd probably have. We're going to add a lot more entries that you could possibly affect cash, like equity injections or loans receivable. Liabilities, cost of goods sold, payables goes 75 and then 0 because we paid it back. Inventory payable, same deal. That's these two transactions here. And then what was the other one? Oh, cost of goods sold payable, this one. Now, if we didn't pay it back, let's say we paid back 65 here and maybe 1200 here, then on the balance sheet, you're going to have balances left on those. Current liabilities, retained earnings, and total equity, and then you can see we're balanced here. So we've got all this working. This is pretty good. It's a bit, bare bones, but it does make sense, and you could actually use this for producing financial statements for a lot of companies. Um, well, no, we don't have expenses yet, like operating expenses, so you'd probably need that. And that brings me to what we're going to do next. So let's clear these out. We know all this works fine. We have all the statements we need. So next up, and this is actually, we don't need two columns here. So next up is operating expenses. So the question is, how do we model operating expenses? And for that, we're going to do three types. So we've already done cost of goods sold, but we're going to do three types of opex. And it's going to be um, general and administrative expense, general and administrative expense on account, sales and marketing expense, sales and marketing expense on account, research and development expense, research and development expense on account. So what that means is you can either have expenses that happen right away in that month, or you have expenses that you don't pay right away, but you incur the expense and you pay it later. Now, we actually need to put one more entry for each of these, and that's to account for it being paid back if it's on account. So you can see the structure's similar to what we've been doing, just different accounts. So here we'll have, we'll call this payments for general and administrative expense. Now, I know it's long, but it needs to be very intentional and it needs to be clear what it is. So here, payments for sales marketing. And payments for. So any expense, I know there's like, you could potentially have hundreds of expenses here, but what we're saying is any expense is likely going to fit in either a cost of goods sold or a G&A, a sales and marketing, or research and development. And that should cover, 99% of expenses that a business has that are operational. I don't actually know what else you'd have. Um, so now we got to code all of these, and then we're getting real close here. So let's put the expense items here. So this is going to be general and administrative, um, sales and marketing, research and development. I think that's the best way because I don't want to list, 1,000 different expenses here. I also don't want to just list like 15 or 20 because then on every single one of those, we're going to have to list out individually what it is here, and it's just going to get too difficult. Now, in the database, when you're going to do the descriptions, you can be specific about what the expense is, but the category is just going to be broadly, R&D, sales and marketing, or general and administrative. So we only need 3 items there. Give this a thick bottom. So sales, refunds, net revenue, gross profit. These can be top and double bottom actually. Formatting's important. Let's give all these subtotals. They can be like, I don't want too many lines, but we need enough lines. What's going on there, my ink? Good to see you again. Gross here, and that can be double thick. Okay, so that's fine. We have these expenses. Now let's start coding. So for any expense, this is going to be a sum, and it's going to be an additional two additional sum ifs. And what we want to do is we want to count anything that says, let's go to our code here, anything that says G&A or G&A on account. And any of those will go in here. Studying for a PhD entrance. Cool. PhD for what? Finance? General and administrative expense. Nice. That's cool. What university? Administrative expense on account. If you care to share, obviously, you don't if you don't feel comfortable. So that now on the balance sheet here, we're going to have to go in and out on all of the payables here. So we have general and administrative payables. Now for this, we do increase would be, oh, in India. Nice. Are you with a company or are you looking, or are you just going to go like independent? Expense on account. So increase would be on account, decrease is payments for general and administrative on account. And we drag this over, add the previous period. Nice. Well, the opportunity awaits. Now, cash flow statement. Uh, so for here, I mean, we're gonna have to list these out. I am assuming. Yeah, there's no other way to do it. So here we have put no border. We're gonna have to do every individual expense type. Yeah. Yep. Excel probably never going away. Let's see. So we want to anything that's on account we reduce out of net income or add it back. Let's see. Add back. Add back general and admin expense on account. And then reduce payments. Do PhD holders get jobs in companies where you live? If that's all, I mean, you have a pretty. I feel like you'd have a decent chance, compared to not having a PhD. Um, but who knows? It depends. Um, you know, it definitely helps. I would say it wouldn't hurt. Okay, we are. I need to get this a little bit more organized. So add back receipts. We haven't done any depreciation. Let's remove this here. We're gonna put this at the bottom. Usually, if you're gonna try to find a really like a high level job, you need to be good at being self-directed. Now, if you're in middle, like you got to be good at taking orders and executing different things. But if you're at the high level, you got to be good at just being, you know, giving demands and having a plan and a strategy, self-directed, no matter what position it is. Okay, reduce payments of inventory, reduce payments to cost of goods sold. Then we have, oh, hold on, I got distracted. Hold on, hold on, hold on. Okay, I don't want to mess this up. Let's just keep this how it is for now. Yep, I can't get lost in. Okay, where was I? So we added these two. I can organize this later. Also, let's be consistent in our labeling. All right, add back G&A, add reduce payments. So I can't just directly reference G&A expense here because that's going to have both on account and not on account. So I have to go actually all the way back to, I'll use this formula. So add back, so we want anything that says general and administrative expense. I believe that's what we called it. Yep. And then this is getting reduced when we actually pay it. And payments for general administrative account. Okay, I believe that's correct. Now let's test it out and make sure we did this right. Okay, so here we go. Um, let's just start in January. Two, and let's say we have G&A expense paid, expense incurred. So we just go with, wait, where is it? Up. So a regular expense, let's say 500 bucks. Okay, there's nothing on account. Let's also say we have the same expense in February. We just check a couple months. Same expense in March. then let's also say in Feb and March we had some expenses that were on account. For 2,000, 1,500. And then let's say we paid those all off in, let's say, May. Paid G&A. And so we hit the last one, which is payments. And we're going to make sure that works. So we paid off all 3,500 here. So that's all the code we just did. Let's check it out. Well, shoot. What's going on here? General and administrative expense. General administrative expense. Oh, I put the wrong year. 2023. No, you can choose to start year of the forecast or the tracker, and I will make this go out to 20 years when I'm done with it. Right now we're just doing 12 months just to make sure everything's going to work. Okay, so we've got expenses here, 2,500, 200, 2,500. It's these are 15 plus that's 35 and 5,000. So let's make sure, is this 5,000? Yes, it is. And then 2,500 for January. Let's check that. So 2,500 January, we have that and that. It's 1,000 plus. Wait, we have. Oh wait, we just have 500 and 2,000. So that's 2,500. Feb is 5. In 15, that's 2,000. So 25, 2, and then March is just 500. Just making sure all this logic is working. 500, 500. Okay. So income statement seems to be coding correctly. Let's go to the balance sheet. Shoot. So nope, we missed something here. So cash. Let's go to cash flow statement. This looks not. No. Okay. So payments on account we need to add back, which was this one. General and administrative expense on account. And what should it be? General administrative expense on account. Did I spell something wrong? General and oh, I sure did. I did administrative. All right, so administrative. Okay. So there's those. So you add, so on the cash flow statement, you have net income as our starting point, and then we figure out what actually hit cash and what didn't. So anything on account did not, and then those payments on account did. So you add back what was an expense that was on account, reduce when it was paid. So we have that working. Now this is still off, so let's see. I might have misspelled something here too. Administrative. That's right. Administrative. Let's check this out. Oh, I spelled this wrong. I keep doing administrative. Administrative. And yeah, once we have all the payables and expenses in, this thing is, it could be used definitely for bare bones to generate financial statements through these transactions. And then I'll just start adding other types of entries after we get these three expenses. Now I figured the best way to do expenses is we got our three categories here. Any expense that's operational is going to be able to fit into here. We also have cost of goods sold and inventory stuff. That's going to cover like 99% of businesses. So I think that's fine. That's a good way to roll it up. And on your database, you can always define the actual expense explicitly in the description, and that's fine. So you have track of it. Um, okay, so we're on G&A right now, and we are off on some of the logic, and I believe It's something to do with this row. So let's see. General and administrative expense on account. Payments for general administrative on account. So let's just manually look at what we had. So none of this matters for payables. This is hitting here, so 2000 in January. Okay, there's our 2000. Now what's happening in February? We added 1500, so it's 35, and then we paid it off in May. Okay, the payoff. So the payoff's the first thing that's not hitting. Let's see why not. Payments, is it payment or payments? It's payments. Oh, this is still misspelled. Misspelled it on here actually. Okay, administrative. Now that's one reason why you use a validation, because you want to make sure it's spelled right here, and then it'll be spelled right everywhere else. I don't know why I have trouble with administrative for some reason. Okay. Uh, so let's change it in the database. There we go. These are right. Straight up. Okay. Okay, we're still not seeing it drop off in May. So that is a problem. Um, this 3,500 payments for general and administrative expense on account in May. Payments for general administrative on account. Now that should be hitting right here. Let's zero everything out and see what the calculation's doing. So it's not picking it up at all. Payments for general account. Does it matter if the A is capitalized? I don't think, no. Let's capitalize that though here, just because it should be. Payments for general administrative. Payments. Payments. So note that to do this stuff, the Excel skills, you just kind of need to know how to do formatting and some sum ifs, and it's not too complicated. The hard part of finance in Excel is actually knowing what the logic is supposed to be. That's where all your value is going to come from if you're doing this for somebody else. And obviously, being accurate is very important and detailed. All right, I'm just pasting this in. There it is. Okay, so what did I have before? Payments for general administrative expense on account. I didn't put expense. Okay, got it. Got it. So this needs the word expense after it. And this is why we do these sanity checks. And this, now it'd be impossible to try to figure out if there was a bunch of other stuff going on in the financial statements and trying to figure out what was off, and you had like 3 million different things going on. Yeah, that's not going to be good. Okay, we still didn't pick it up with the update. Payments for general administrative expense on account. What am I missing? May payments for general and administrative expense on account. Let's paste this in. It won't let me. Okay. Let's go right back here. Oh. Yep, not picking it up. So this is frustrating. I can't. Payments for general and administrative expense on account. Payments for general and administrative expense on account. Okay, this is the same. It's the same thing. Let's paste this one in. I don't know why it's not letting me paste in the other one. What am I missing here? We had it. Let me undo. We had it in there. So undo. Shoot. Okay, redo all of this. Okay. So we're getting the actual on account one right. We're not getting the payments. This is for some reason like, are we missing a space, or is there an extra space in here? Payments, May payments. Okay. Payments for general and administrative expense on account. All right, new approach. Let's go. Where's May here? Let's remove the equal sign so we can hard code in the text. This is crazy. Why is this blank? Test. Okay, there's that. Where is this? Copy. Now let's see what's the difference between these two. Why can't I copy this over? Okay, here's what we have. Let's do it this way. Here's what we know we have. Right? That's what's in there now. Here's what's in here. Oh, something is off. I think. Are those the same? Equals this. False. They are not the same. Add. Oh my goodness. Ah! I put admin. Wait. Admin. Administrative. I am having trouble with this word. Holy moly. All right. Administrative. Let's get this back in here. I got it. I figured it out. Holy crap. Look at what I'm typing here. I typed in administrative. Admin with an I. Okay. There we go. So May is paid off. Holy crap. That was frustrating. So that works fine. Okay, so our general administrative payables account is looking good for this. Now, we still have an issue, which is we're out by $2,000 here. So we know that the payables goes up, cash is going down with the expense. These are on account though. Oh, okay, so we got to add these other two columns in here. So the balance sheet becomes our ultimate sanity check again. So now we're good here. May. I guarantee I spelled something wrong here. And so this one, payments for general and administrative. Yep, spelled it wrong. Administrative. I do not ever want to have to type that word again. All right, cool. So now we should be balanced. Wait, this is a reduction. Negative. Perfect. Okay. Okay, we got it. Awesome. Awesome. Let's make sure. Now we already checked the other logic. I just want to double check. So that's an expense. Yep. Payments reduction. Reduction. Depreciation we have not done. Let's clear out this column or row. And add back receipts. This is good. Okay. Reduce sales on account. Yep. Okay. All right. So we've got general and administrative expense all coded up, figured out, balanced. It's all working good. So the next thing we do, so this is fine. From Brazil, we use BR gap here, but doesn't have so many differences. Oh yeah. So what's interesting about accounting? It was developed by the monks back in, maybe 2000 or a long time ago. Over 1,000 years ago, I'm pretty sure. Maybe 500 years, I can't remember. Um, but yeah, it's generally the differences you'll see between different countries is usually has to do with inventory valuation and revenue recognition and expense categorization. You probably have differences a little bit in maybe what's considered a financing activity or investing or operating activity. And but yeah, generally, I mean, it's all numbers, so you got it has to be somewhat similar, and you're trying to figure out, you know, what was the increase in wealth, what's the tax on that. Okay, we did G&A, let's do sales and marketing. So same exact logic. Let's do spelling errors because that was a big bane of my existence on the last one. Sales and marketing expense. Sales and marketing. Okay, so this looks fine. Let's start coding these. So same logic, different type of expense. So let's just drag this down. But now we change this to sales and marketing expense and sales and marketing expense on account. Sometimes to go slower is to go faster. So if I would have went slower on that last coding and not had those spelling errors, I would have actually finished quite a bit faster. So let's go real slow here on the spelling. Sales and marketing expense. And then here we also add sales and marketing expense on account. So any of those entries will increase your expenses on the income statement. Now the balance sheet will have another row here for sales and marketing payables if you're doing anything on account. Now that is going to be similar to this, but we just changed the wording. Sales and marketing expense. And then sales and marketing expense. Oh, expense on account. Okay, plus the previous period. Okay, that's fine. That's fine. Sales and marketing expense on account. Sales and marketing expense. Oh, wait. Sales and marketing expense on account. And then payments. What's this last one called? Payments for sales and marketing expense. Okay, so payments for sales and marketing expense on account. The spelling errors seem to be the biggest problem I'm having. I'm glad it's not logic errors though. So now here we have two more items to add, and then we'll have the R&D stuff too. So 4 total, and then we'll be done with opex. All right. And then here, add back sales and marketing expense on account, reduce payments to sales and marketing. So this is jolly dandy here. We drag this down. Actually, reduction will be that one, and this will be that one. So here, and this is adding back sales and marketing because that's not a cash item. And then this is payments for sales and marketing. Man, real happy to see people in the chat lively. 2 different people in one stream. That's a record. That's a record. I haven't had 2 different people talk in the chat in 2 years. Payments for sales and marketing expense on account. Okay. So we code that in there. Make sure this is adding that up. Now, the moment of truth. Let's start adding a couple expense entries in here to see how it works. Okay, so sales marketing expense. Let's say we just have a regular expense here for 500. Let's do another one for February. So these are fine. These are just, regular expenses recorded in the month they happen. You've paid it out. It's all done. Now let's say you have some sales and marketing expenses in January on account instead for 5,000. And February, let's, rack it up again, 10,000. So you've got all these liabilities being created. And then let's say we pay some off in March and in June. And then these are going to be payments on account for these. And let's say we pay off 8,000 here and 7,000 here. Okay, let's check the statements and make sure we're all coded up and balanced. So for these expenses, January we should see expense of 5,500. Okay, we do. And then February we should see 11,500, which would be this one. 10,000, 11,500. Perfect. Okay, so that's looking good. Balance sheet, nice. We are balanced there, and we have all kinds of stuff happening. So cash goes down. Uh, Payables is up, goes up again, then goes down, and then finally paid off in June. That's looking good. Cash flow statement, we have net income. Then we have adding back the stuff on account, reducing the payments on account. All looking good. All right. That was a lot smoother because there were no spelling errors in my formulas, so great. Last item. Last item here, research and development. Let's drag this down. Same formula, but now we do, let me just double check research and development expense. Okay, perfect. Research and development expense, as well as pulling research and development on account. Okay, drag it over. Balance sheet. Final one here. For opex payables, we have research and development payables. Okay, awesome. You know, this tool's probably going to be good also for like students who are trying to learn accounting. This is probably very extremely helpful. Extremely so. And it's also, I mean, for a company, they can actually create their own financial statements with this as well. So I feel like there's going to be plenty of demand for this tool in general. I'm excited about it. All right, so research and development expense on account, and then payments for research and development. Okay, looking good. Cash flow statement, final one. Paste these down into here. And these are research and development. How's everybody doing? It's a bonus stream today. I normally stream Mondays and Tuesdays, but I'm really excited about this tool, so we're pounding through. Research and development. Okay. Add back on account, reduce payments. So here we want reduction and account there. Now I'll get into some more interesting entries as we move forward. I guess next I'll do depreciation, and then after that maybe I'll do like debt. We'll also do like taxes. We're gonna do other income, other expense, non-operational. Lots of fun stuff. All right, these two should be good. Now let's test them out. Make sure this is adding up everything. Okay, let's put in some dates here. R&D. Now we have R&D expenses. Let's go 6,000. Let's say we have some for Jan, March, May. Then let's also say same months. Well, actually, let's go 1, 2, and 7. And let's say these are all on account. And they're bigger, 15,000, 20, 150,000 is fine. And then we pay those off. Let's say we go into August and we don't pay them off until then. And let's say let's say we pay off some in August and some in October. And we could put maybe 100,000 here. Oop. And 80,000. Oh, no, I don't have that much. Maybe 25. All right, now let's check the accounts. So income statement, R&D for Jan 156. January we have 6. We have 150, and that would be it. Yep, so that looks good. Then 2665, 20 for Feb, 6 for March, 6 for May, and July 5. Okay, good. So that's all looking good. Balance sheet, nice. Balance sheet is balanced. So we have our R&D payables over time here. We still actually owe 50,000 at the end of the year. That makes sense because we did how much? We did 175 and then we paid back 125. So that's correct. And here's the effects on the cash flow. Looking great. Okay. So now, yes, you could basically, well, no, because you couldn't account for taxes yet. So you could almost do financial statements for a company with this. Taxes, though, we'd have to have taxes in here, and then you could technically do it for a company. All right, let's do some quick formatting here. I want to make sure these are all the same. All right, what is this? 1, 2, 3, 4. 1, 2, 1, 2, 3, 4. Okay, 4 spaces. Are these all 4? 1, 2. Yep. Okay, so these are fine. Let's move these over. Make it look nice and neat. Oh yeah, and there's actually no logic for capex or depreciation yet. No, something like property taxes would hit in G&A, but income tax would hit here. Let's check these subtotals as well. They look good. All right, I'm good with this. Let's keep going. So the next type of entry we can do is depreciation. So this is pretty easy. We simply say, well, let's do the cap. Well, No, let's do these separate. Okay. So first we will have CapEx, or no, there will be some capital purchase, but we're not going to code that yet. Then what will happen is you have depreciation expense, and you also have accumulated depreciation, which is going to automatically happen based on the depreciation expense. Now, does accumulated depreciation ever zero out? Let's check. Accumulated depreciation ever. I guess it would. Depreciation ever zero. Yeah, we know that. Community risk recorded as a contra asset. Yep, know that via credit portion of a journal entry. All right, long-term assets. Net book value. So yeah, basically it says you've got capital assets of this and accumulated depreciation is this. Net them together, and that's the actual uh, book value, net book value. Okay, so hold on. So depreciation expense does get closed out or reduced to zero at the end of the year with other income statement accounts. Since accumulated depreciation is on a balance sheet account, it remains on your books until the asset is trashed or sold. Okay, that's what I thought. I just wanted to make sure. So that's fine. Now the question is, depreciation expense is a non-cash item. It hits the income statement, reduces income, added back in the cash flow statement. So, and then it's a contra asset as well. So it zeroes itself out there. Let me look real quick. Let's look at, I'm curious about, yeah, okay, yep. Now, what about the credit entry that they're talking about? No, I'm not worried about that. Depreciation, journal, entries. So this is what we're going to do. Okay, oh, sure. Okay, that's fine. So for the purpose of this, we just have a depreciation account. So you're going to buy something and then you'll start depreciating. That's fine and dandy. On the income statement, we'll put it here as depreciation expense. We simply sum if. So this will be a really easy one. Equals sum if the database equals depreciation expense. Now, a little bit more difficult part is we have that there on the balance sheet under long-term assets. We have this. We also have, I'll put this under here actually. accumulated depreciation. And that calculation should just be, and first of all, this is the wrong format. Wait, 1, 2, 3, 4. Aren't all these custom? Is it because this is a reference? So, yeah, okay, that's fine. All right, let's. So adding accumulated depreciation, I feel like the most intuitive way is just you take it here and you add it over time, and that's it. Although, why is this still, we want that over. Okay, that plus here. So there you have it. Now we can test that out pretty easily. Let's say we record accumulated depreciation on a date. Depreciation expense. Okay, and let's do a couple. Income statement, perfect, hits there. Balance sheet, oh, we have missed something. Cash should not be affected. Oh, we got to add it back on here. Okay, so that makes sense. So here's this. So depreciation, anything that was depreciated here in this row, we add back. All right. Oh, we're still out. Let's see. Accumulated depreciation, retained earnings. Let's think. Do we have to technically have a capital asset for this to balance? I didn't think so. Uh, Maybe though. Let's just get one of these entries in here and see what it looks like. So this zeroes out. That makes sense. Balance sheet. This is contra. Okay, hold on. Undo contra asset. What does contra mean? It's a negative value. So this is negative. Negative, 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 negative. Whoop. There we go. And now we are all set. So that's coming through. It's a negative here. Okay, good. So there we're balanced out. All good. Okay. So the next thing we can do is capital asset. So we just put capital asset purchase. Now, I'm thinking how advanced do we need to make this? So if you buy something, you start depreciating. The question is, do we want to incorporate buying a capital asset on account? Uh, let's look. Let's refer to our helper here, capital asset journal entry. Let's look at the logic. Fixed asset. Da, da, da. Yep, 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 yep. Okay, I don't need an entire accounting explanation. All right, so you buy it, cash goes out. Now, what about if you're buying it on account? Um, so interesting. We will have this. So we will want to have logic for disposal of fixed assets. Um, and that's where we will have a credit to accumulated depreciation as well. Okay, okay. I need to remember this. Let's put a note in here because I don't want to do this right now, but we need to remember this. Okay, so notes, add logic for disposal of fixed assets. And then here's a source. But I want to see journal entry for buying fixed assets on account. I guess it would be two separate entries, like a loan. How to book a fixed asset. You know what I'm saying? Like maybe, yes. Yep. Okay. Here we go. So fixed asset, we we increase the asset and we increase liability, and then when we pay for it, okay, that's fine. Okay, so what it would be is capital asset purchase on account, and then repayment or payment of capital asset on account. So here's to buy it. If you buy it, it's just this in cash. If you buy it on account, it's this in a payables account. This is a payable, or this would be the payable, and then when you repay that, it reduces this. Okay, that makes sense. All right, let's code this in real quick. So this is not going to affect the income statement whatsoever. Balance sheet, it will. Property, plant, equipment. So we go sum ifs. Actually, I don't want to rewrite all this formula. We can just use one of these. And what did I call it? capital asset purchase. All right, so anything that's added to that, we sum it up here, plus here. And in the future, we will have option for, oh, shoot, what am I doing? We will have option to reduce that if you sell to dispose of the asset. So I put a note here to code that in. We'll probably do that tomorrow. So for here, where was I? So we have increase of asset, and then the only other thing that will happen is cash goes down. Now here, let's keep in mind, this is not an operating activity. It would be capital asset purchases go under investing activities. And 1, 2, 3, 4. So let's put capital asset purchases. And that would simply be the same. We need to sum ifs. Any, and it's going to be, remember, we have capital asset purchases also on account. So hold on. We have to add anything on account as well here. On account. Capital, okay, good. And then that'll also increase accounts payable. There's that. Capital asset purchases. Now here we'll actually add capital asset purchases. This will be a negative. And on account, no wait, how do we want to label this? We want to reduce the purchase and also reduce any payments. No, we want to add, hold on, I'm confusing myself. Add back capital asset purchases on account. Reduce capital asset purchases. Reduce payments. Now note a payment, and I believe we should have two here just like these. Oh wait, no, this is for payments. It's not hitting net income, so we don't have that other account. So we have to actually have, a capital asset purchase right away or or a payment, both reduce. And then this one increases the cash flow statement because it's on account. So reduce payments for capital asset purchases is going to be a double. It's going to be a negative of any capital asset purchases, also minus payments for capital asset purchases. Payment has no S on it. Okay, capital asset purchases. And then here we simply add back as a positive value any capital asset purchases on account. Okay, so there's that. Nothing's happening here. Balance sheet, we have a couple things going on as well. So if you're doing it on account, it's likely going to hit long-term liabilities. If it's a capital asset, you're probably going to pay for it over time. Not necessarily, but we're going to code it in there. So we're going to put here capital assets payable, capital asset payables, and that, oh, 1, 2, 3, 4 comes in here. One, two, three, four. Okay, that's that. So what we do here is similar to these other accounts where we add up any a little bit different. So capital asset purchases on account. Actually similar. So capital asset purchases on account, and then reduce payments for capital asset purchases on account. And we're going to track, we'll do an example of this to make sure we've done it correctly. Let's add this. Okay, cool. Here we go. So let's say in January, we buy a dozer. Okay, we just buy it with cash. What happens? Well, that would be capital asset purchase. We buy it for, I don't know, $500,000. And let's just check the second month. Let's say we do the same thing in Feb. And then let's say here, Jan and Feb, let's say buy dozer on account. Now what you do if you did a down payment is you put whatever the down payment is as capital asset purchase, and the remainder on account, whatever that would be here. And let's say these are going to be bigger. All right, so you're buying it straight up with cash here. Here we're buying it on account, or these could be down payments and the rest is on account, whatever the case. And then let's say in April you start paying it back. Pay. We say okay, we're now paying some of this back. Let's say we pay 50,000 payment, and then again in May another $50,000 payment. Okay, so income statement, nothing's happening. The only thing that will happen on the income statement in relation to this is the resulting depreciation entries that you make. So there's that. Okay, we have property, plant, equipment. Oh, and we are off. We are off. We're not checked, so we'll have to see what's going on. So here's the purchases. This looks correct. Um, oh wait, we have no, so this entry is just completely, I must have, let's see, what's the code for this? Capital asset purchase on account. Capital asset purchase, no ES at the end, or S. Let's try that now. Okay, and then payments for capital, what's this? Payment, no S again. All right, no S here, and no S here. Whoops. Payment for capital, payment of capital asset account, payment of capital asset, payment of, not for. Okay. Now I think we're talking. Now we're still out by 1.1. Let's go to cash flow statement. Okay, yep, we probably coded all these wrong. So spelling errors are detrimental. So capital asset purchase on account should have no S. And then capital asset purchase is capital asset purchase. And then minus payment of capital asset on payment of capital asset on account. Payment of capital asset on account. All right, now we might be cooking. So there's the cash flow activities of capital asset purchases, balance sheet. Oh, no, we're still out. We're still out. So let's look here. We're up by 1.2. Cashes should not be positive whatsoever. Uh, let's think here. Oh, we don't need to add back asset purchases on account. We just don't count them as a negative because it's not like it's hitting net income. So you don't need to add this back. We don't even need this. We just need any payments going out for capital purchases. And there we go. So this makes sense because here's the actual cash movements. The remainder, so you have 1.2 million here, but you only paid 500. What's the remainder? Well, 1.7 million in total assets. 1.2 million is the difference, which is what your payables amount is. Then here you're increasing the asset, you're also increasing liability. Okay, so this makes sense. Now this will never go down, but you do have accumulated depreciation, which should be happening. So, and we already coded that before, so that's an option to enter. For example, you could put, let's say, in April and May, you have depreciation. We coded that here. Oh, depreciation expense. Let's say of, I don't know, what's the total purchases here? 4 million, let's say 4 divided by, I don't know, 15 divided by 12. All right, so let's say 22,000. Now this depreciation expense will hit the income statement. Balance sheet, it hits here as accumulated depreciation. Retained earnings, that's where it hits from the income statement. And then cash flow, it's just a net zero effect because it's an expense, but it's also added back as non-cash. Okay, and then these all balance down here. Perfect. Man, this is really, really, really cool. This is really cool. I cannot wait to finish this thing. And so now that we're done with all of the, we've coded all potential revenue logic, contra revenue, cost of goods sold, payments for cost of goods sold, inventory on account, all of that. All of our operating expenses we did today. We've also done depreciation. We did capital asset purchases, all of that. I do need to code in the ability for you to dispose of assets, so disposal of fixed assets. There's no logic for that. Once that's in there, that will reduce um, the asset account, and then I believe that should also reduce accumulated depreciation. I'll have to look up the entry exactly, but it will have some effects there. But man, this thing is really turning out. So my initial approach was way too hard. I was trying to do like a million different revenue accounts and all this other stuff. This approach that I've done yesterday and today, where I'm just building one revenue account or one account type at a time, is going really well. And just testing it, making sure it all works, then move on to the next one. So you can actually create, well, no. So again, we haven't done taxes yet, but taxes will be, we can do that tomorrow. It's going to be a similar effect where you have tax expense or maybe taxes payable, tax expense, and then actual payment of that. Same kind of logic there. Once that's done, this could definitely be used for a company. Now there's other stuff like, again, disposal, all this other logic we still need to code in, all kinds of stuff. But now it's getting fun because all of the main stuff is done, and now it's just kind of interesting things. Loans, we'll do loans, logic for loans. Um, so yeah, very cool, very cool. I'm excited. Um, we're gonna keep going on this tomorrow. If you guys want to check out more stuff, support me. Go to smarthelping.com. Again, all my models, you can purchase everything I've ever built for $9.99. I've got hundreds of startup models. These are all forecasting models, forecasting revenue, expenses, cash requirements. Most of the startup models here do have three-statement modeling built in. A lot of real estate deal analyzers. Here's the industry-specific startup models for all kinds of things. Cash flow waterfall templates. Accounting tools. This is where this accounting system will be entered into or added to, I mean. And again, any bundle purchase, you get all access to all the sheets in the bundle and anything that's ever added to that in the future. Alrighty, I am out of here. I'll see you guys tomorrow morning.